The NGX rally is back and the banks are leading again. But the real question is, are investors already late or are there still cheap stocks hiding in plain sight? In this episode, we'll highlight some of the cheap stocks investors should keep a tab on. Banking stocks have led much of the rebound, and FirstHoldCo is right at the center of the story, with Femi Otedola now reportedly buying another major block of shares worth about 78 billion naira. So that kind of aggressive accumulation raises serious question, if you ask me. Is this momentum just hype, or are major investors seeing deeper value in the market? So today we'll have a deep dive on the renewed rally, whether First Holdco still has upside, what the recent movement in Access Bank is telling us, and which bank or non-bank names could be the next movers. So stay with me, everyone, and welcome to The Edge. I'm delighted to be joined by Oladipo Ajayi. Oladipo Ajayi is head fixed income and vice president at Chapel Hill. Oladipo, how are you today?
Hello, good day, Dr. Kafo. Thank you very much for having me once again today.
All right, everyone. Welcome. Thank you, Deepo, for always joining us. If you are new to this channel, please like this video, subscribe, and hit the notification bell. We are here every weekend helping you to make sense of the investment world and the financial markets as a whole. All right, Deepo, how's your week been so far? A lot of things have happened. We've seen the MPC decision, we've seen the bond auction. Um, so how's the week been so far for you?
Well, it's been a great week, and I don't think on the part of the monetary policy guys, nothing surprising happened.
Okay.
The view is that there will most likely be a hold because we feel that it will be premature for them to start cutting rates, and we also feel that it will be sacrilege for them to actually hike rates. So when you look at the market dynamics and you see what's currently fueling inflationary pressure, of course, it will be good to say point directly at one thing, which is the crisis in the Middle East. And you will see that when we will notice that bit of respite, we saw that little impact on inflation. Inflation actually reversed marginally
Mhm.
by 3 basis points. And so it will be good to say that that is exactly what's actually fueling the crisis. So I feel that raising rates will further exacerbate that crisis. And but we also feel that lowering rates at such a time like this could also fuel further inflationary pressure. And so the money policy guys, they're actually very right to have kept rates stagnant at this current level because we aren't expecting any extraordinary thing. But same day, I think it was on Monday, there was also bond auction
Yeah.
by the debt management office where they actually offer about 1.2 trillion across three maturity, the 2035, 2037, and 2038.
38.
All these instruments, they are more like reopenings. And but what is actually very, very surprising was that the DMO did not actually allot fully what they offered. And they have rooms, they have opportunity to actually take that volume. But I think that they're actually very sensitive to pricing. And I think what DMO communicated to the market is that as much as we are ready to actually go bullish in borrowing, we are not ready to actually take our borrowing cost beyond a specific level. And I'm not sure market got the signal because when you see what happened post auction, it will be right to actually understand that market actually understood what the debt management officer was actually passing across, which simply means that as much as the mandate to borrow is there, also the mandate to actually manage the cost of borrowing is also part of the KPI. So that's another thing that actually happened during the week. Yeah, so it was a very great week in terms of that the central bank was not in the market this week to offer mobile. And we
Yeah.
have almost maturity of about 1.7 trillion that actually hit the system. Also, we have fact payments into the system as well. And but yet the central bank was not in the market. But you'll be wanting to note that um, last Friday there was a CRR maintainer that actually took out close to about 3 trillion from the system,
Okay.
and I'm sure that's exactly what the central bank actually rested up, and that's one of the reasons why they decide not to actually come back to the market this week. And on the FX side as well, Naira also gained. It was a good day for Naira, a good week for Naira. We saw a lot of foreign participation, majorly in the bond side. And we've been talking about it for the past weeks, that most of the aggressive buying that we've noticed in the bond space
Mhm.
was majorly from foreign portfolio investors, and the activity in the FX market, coupled with their interest in the bond market this week, further confirm premonitions that these guys actually they like rates at where it's currently trading. They also feel that it's a very good levels where anybody would want to actually invest, considering the Nigeria current credit rating, and also the view that Naira will be stable for quite a long
Quite a long
time.
time. Okay.
Because so why should I not actually take advantage of 18%? And even if I'm
At
going
this
to take
level.
money at 4%, so there's this angle of carry trade opportunity that you can actually earn close to about 1,400 basis points. So would not want to take
Take
such
advantage of
opportunity,
that.
and I think these are some of the highlights of the week for us.
Yeah, brilliant. One thing I wanted to check though, so we've noticed, I think some revision to the auction or bond calendar for the quarter. And you also mentioned that they did not fully allot the amounts that they had on offer for those instruments. Does it have anything to do with the finance minister's presentation? I think at the Senate, was it early in the week, where he was describing the fact that their government's revenue has increased, but they still have to borrow money to be able to meet the gap that is left due to, you know, that mismatch in the revenue they get and the expenditure. Is it now that government revenue is increasing at a pace that we might not see them borrowing as much as they had planned initially?
Well, for me, I think I've said this earlier on, I think on this show before that what we're currently seeing, the desperation we're currently seeing, I think it will stop by the end of this quarter
Okay.
because by September the rally will start, the campaign rally will start, which simply means that for the year 2026, we have like about 9 months calendar for most government agencies and parastatals and businesses like that. So you understand it's not a time where you want to go into the house to start getting approval for some things because even those people that you want to go and meet in the house, they are all at their own their pace trying to actually canvass for votes for re-election and the like. So I was not surprised when I saw at the end of the day the volume. So it simply me. My view is that by the end of this quarter, we'll likely not see much the latter part of the year. But when we start seeing revisions, don't forget when it comes to revenue and borrowing, at the beginning of the year, you expect the government to be a bit bullish in terms of borrow. Why? Because the revenue would not have started sprinkling aggressively at the beginning of the year. Your expenses are already there, capital expenditures are already there that you need to kickstart very fast. So you expect them to actually be a bit bullish at the beginning of the year. So as you're getting towards the tail end of the year, the expectation is that you expect borrowing to slow down because at that time you expect revenue to now started rushing in aggressively more than what you'd have seen at the beginning of the year. And you can actually listen to, you had what the Minister of Finance said around the fact that most of the power starter, they actually surpassed their target for the year, and when you're actually measuring them by half year. So it simply means that they need to borrow, but it's just that we don't need to borrow as much as what we have gotten approval for based on what is actually highlighted in the budget for the year 2026. I think that there's every likelihood that what we are seeing, the revision we are seeing, could be on the back of that, trying to tell us that now that we are seeing more revenues coming in, then we may not likely be as aggressive as we have thought in the first instance. And what this will mean to the market is that we'll see a bit of adjustment in rates in the market. And I think experts in the market already...
We started seeing that post
exactly.
auction.
Yeah, that's what I'm saying, that the experts in the market already, they understood that statement very well. And that's why they started taking advantage of that. Instruments are currently trading to sub 18. And this same instrument, about 5 weeks ago, surged to as high as 1895 levels, so almost touching 19 levels. Even some analysts...
Some instrument actually crossed 19%.
Some analysts are even of the view that could it be that we are heading back to 20%, but where we are now, to a great extent, shows that the level where we should, and it also means that we may likely start seeing yield that's actually reversing downward, considering that the desperation is already thinning out.
Okay, I mean, I think we've also seen the demand, the rally in the fixed income market now begin to trickle into the equities markets. Of course, the Nigerian stock market is largely dominated by domestic investors, as we mentioned the last time. So we're seeing that continue. So the NGX all share index is hovering around maybe 246,000 points, about 247 level. The market cap is approaching 160 trillion naira mark, and the year-to-date gain is over 54% thereabout. So banking stocks are now leading the change, leading the charge. They are actually leading this next phase of the rally of the momentum that we've been seeing. So the question is, do you think this is sustainable, or is it just something that is being driven by the fact that we're seeing yields come down in the fixed income space, or is it something that is driven by earnings or potential dividend, half year announcements, earning season that we're in? Is it something that is driven by some of these factors, or is the momentum like we saw in the first half of the year back?
Well, if you remember very vividly, we mentioned that by half year we expect the result for H1 to a great extent actually drive market momentum. And we have actually highlighted here before that one of the things that we feel will actually drive market back to the positive terrain again is the release of results. And we saw that happen with FirstHoldCo with that stellar performance. And And immediately we noticed that repricing that we saw of FirstHoldCo. And what's very amazing is that just this week, FirstHoldCo actually gained over 26, about 26% just this week. And when you look at between early July and when I mean early July, that's around 4th of July to that. FirstHoldCo has done over 100% because FirstHoldCo was trading around 52 naira at that particular point in time. And so it means that within a month, this name has actually printed over 100% level of return in the market. And when you look at that vis-a-vis the result that was released, of course, that could actually be one of the driver of the back end. And also the buyer, one of the greatest buyer in the market still remains one of the owner of the business. And one thing about investment is that when you see the owner of a business buying more shares of the business, it tells you that there's something he knows that you don't know. And that
the same way if you see them selling.
So it tells you something. There's something that's happening that you are unaware of.
Sorry, Dickwo, but before we really dive into this First Bank, the recent acquisition that I think you are, about to you want to talk about. I'm also thinking because of this new momentum, do you think foreign investors are back, and especially in the equities market? Do you think they are also part of this new momentum?
Yeah, we saw a couple of them in the market. We saw a couple of foreign investors actually participate in the market. But it may not be as aggressive as what we have seen in the past. And currently, the mix is currently local investors are close to about 85% of the market as we speak currently, while foreign investors just about 15%.
Yeah.
And don't forget that most of these foreign investors now have other outlets where they can actually participate in Nigerian markets. And what I mean is that they can actually go to London Stock Exchange to buy GT Bank. They can go there to buy Seplat. They can go there to buy Airtel. So it means that there are some names that they necessarily not come to Nigerian market to come and buy. So they would rather just go to LSC to go and buy some of those things. And that's one of the concerns for me, that if Nigerian names, businesses start continuing this stride of actually the dual listing position, could it be that will actually affect the level of participation of foreign investors in a market, because they would rather just go through the other route to trade to a more established market than coming to the Nigerian market to trade. But when you look at the participation, of course, we've seen most of them actually coming into the market. But it's just that, when they come to the market, it's not broad-based. They are very, very selective. They know the names that they are actually coming for. They are lover of Zenith Bank. Like I mentioned, they love GT Bank very well. And they love Dangote Cement. And they love a couple of other names like that. They love MTN. And a lot of names in that regard. And when you look at most of the names that they actually follows, these are names that has fundamental and has a very good opportunity to actually grow.
Okay, so let's talk about FirstHoldCo now. So FirstHoldCo have been one of the standard performers in the last week. So Femi Otedola just acquired about 700 and I think 6 million shares for about 78 billion naira, raising his stake, maybe nearly about 22% thereabout. That's coming on the back of that strong H1 result that we're talking about. So I think the company's market cap now it's north of 5 trillion, 5 trillion naira. So what's really driving this aggressive purchase by Femi Otedola? Is it the earnings, the valuation, or is this something more strategic that he's trying to achieve, or that our external investors are not seeing in the bank?
Well, I think it will be a couple of things, and firstly, it's more like the performance of the bank. And if you notice that the activity started aggressively before the release of the result, so it could mean that there are foresight, there are people that have the view that First Bank will actually print better results. And I can remember vividly once mentioned this on this show that because the level of provisions that First Bank actually provided in their book last year.
Remember that's
So
$748 billion.
so we mentioned
748
that.
billion naira that was
So we stated that
taken down.
with the rate at which they are actually going after their debtor, we saw what happened with Net Oil and a couple of other names like that. We feel that they will likely be right back into their financials, which one way or the other will further push their return upside. And I think the right by one way or the other started because when you look at their financials, it shows that strong momentum, both from interest income and non-interest income together. So it was actually a very good result altogether. And beyond that, another thing that could also be the driver is strategic acquisition, in a way where you are trying to actually further improve your control of the business. And I think that's one of the reasons why we've seen Otedola actually acquiring more shares of First Bank. We've seen him, he has done this in Fort Oil, we've seen him, he has done the same in Geregu. And here, again, we are already seeing that traction. And I know a lot of investors are buying First Bank, not because some are not even looking at whether he has fundamental or not, but in as much that Otedola is on the board, they feel that one way or the other, they have someone that can actually drive up the price of the name, and I think that's one of the reasons why some level of investors are actually holding First Bank currently. And so, like I said, strategy acquisition, and like I said, stellar performance from the bank for their H1 result. And these are some of the reasons that led to that surge in activity.
Okay, so let's dig into that H1 numbers briefly. So the company reported about 1.93 trillion, that's gross earnings, and profit before tax of about 653 billion naira, which if you compare with their year-on-year figure, that's about 84% jump. So the question would be, how sustainable is this level of profitability? Is it something that is one-off, given those write backs that just go directly to income? How sustainable is this going forward? And what does it tell us about the quality of the recovery versus, maybe one-off items, or now that they're having lower impairments?
I think for me, I think it's something that can easily be replicated. When you look at their full year result last year, even with the provisions that they actually made, they were still able to actually print marginal profit after tax. And when you sum that together, that takes you close to about a bit over 800 billion full year performance. And, so when you actually now gross where they are currently sitting, I mean, profit after tax currently now is not of 550 billion. So it means that by a full year, you have done about 1.1 trillion profit after that tax. And when you compare that with what actually happened the last year, X the provision, the aggressive house clearing that they actually did last year. Of course, so it means that marginally maybe it was just about 20% increase in profits that you expect. So for me, I think there is something that can be done because if you are able to actually print close to about 900 billion last year and you are doing 1.1 trillion now, I don't think it's something out of way because one, don't forget that they are more capitalized now, so it means that they have more fun to actually sweat. They have opportunity and they have more funds to actually play with, and both on the interest side and non-interest side as well. They have fun to actually use to actually use in actually making revenue. And so I think that is something that can be replicated. And now that they can actually fly lighter, now that they are clear, they've been able to actually clear their house aggressively. It means that they have what it takes to actually meet the requirement or meet the target or expectation of the populace. So I feel that what has actually been slowing them down over time has been this impairment and taking the bull by the horn and actually clearing that huge or humongous non-performing loan. I think one way or the other, it has helped them to actually clear their way and help them to actually move faster now.
So is FirstHoldCo now trading at a fair valuation, or do you still see some meaningful upside at current levels, or has it peaked?
For me, I'll still hold. I will have a hold on FirstHoldCo as to speak currently, because the instruments, like I mentioned to you, has grown from about 52 naira in the month of July to around 120 naira now.
Mhm,
And so it means that he has done over 100% level of return.
mhm.
And when you look at their price to book, I'm sure the price to book would have been over maybe close to about 1.4, if not more than that, as we speak currently. So it means that it's already trading about 40% over the book value. So I would actually stay. I will stay off on First Bank. For me, I will not be loading First Bank at 120 levels. And I will wait until when I see a bit of retracement because I don't think this level is a fundamental level where I should be loading the instrument.
Okay. Now let's talk about Access Holdings now. So Access Holdings posted a sharp move during the week as well. I know we have some of our viewers who have been saying yeah, they probably stay away from Access Bank now, even though I think we talk more about Access Bank here as well. Obviously, because we see that the stock still has a lot of upsides to go. So we witnessed that sharp move this week. So my thought to I wanted to find out from you is what's behind the sudden interest now? Does the stock still have any, upside potential relative to other big banks? I think it closed the week at 29.20.
It's just so unfortunate, Dr. Oka, but I actually don't want to talk about Access Bank until when the stock starts trading around 15 naira. Because I feel that it's a stock that a lot of people will actually look down on. And it is actually abysmal when Access Bank is trading at 29 naira and FirstHoldCo is trading at 120. I'm telling you, when you look at the
The gap is so
valuation,
wide, right?
it doesn't make any sense. It doesn't make any sense. When we speak currently in Nigeria, as we speak, the cheapest bank in Nigerian market to speak currently still remain Access Bank. Access Bank is currently trading about 0.3 price to book. And so give you advice that it's still trading at close to about 70% discount to book. And you have GT Bank already trading about 50% over book value. You have Zenith maybe marginally about 20% over book value. I was seeing First Bank also now trading aggressively above book value. And you have Access Bank that's trading maybe close to about 60 to 70% discount to book value. And so I think that there's a lot of things that a lot of people are not seeing about the bank. And for me, I look at Access from a bank that if Access come to the market and pay 4 naira dividend, that would mean 20, close to about 15% return to investor. And for any other bank to actually give 15% return, when you look at bank like GT Bank, like GT Bank, for example, now GT Bank is trading around 140, about 130. So for GT Bank to pay, that means GT Bank has to pay around close to about 19 naira or about 20 naira thereabout
Yeah.
as dividend for them to have 15% level of return. So when you look at that and you compare it to Access Bank, so it means that GT will play close to the share price of Access Bank as dividend for them to actually meet that level of dividend yield. And so I feel that Access Bank is heavily on the price. He has potential, he has upside, he has headroom, he has opportunity to actually grow beyond where Access Bank is currently trading as we speak currently. For me, I won't be surprised if by year end or Q1 next year, Access Bank is trading 60 naira because I feel that is the stock that can actually trade within that range. One of the things that actually stole Access Bank down, we all understand what happened last year, how They couldn't pay interim
Yeah,
dividend.
so they've not paid
Yeah, so
dividend
they were
for they didn't pay dividend for full year 2025 because of that regulatory constraints, uh,
yeah,
linked to the CBN forbearance and I
yeah.
think those compliance requirements. Yeah,
So for me, yeah, and I will also look at it from this perspective. Oh, I'm not actually expecting Access Bank to pay a dividend for each one. So maybe a GT Bank will pay 5 naira for interim dividend, for example. So I would rather just discount that from Access Bank as we speak. So maybe I'm actually expecting Access, what you would have expected Access to do, maybe pay 2 naira interim dividend. So it means that when I subtract that from the price of where Access Bank is trading and compare
hmm
that to a GT net of the interim dividend. Then I
dividend.
can
Yeah,
also look at the valuation at that particular level to see where. So I mean, assets at 29, GT net of dividend maybe at 125, or Zenith net of dividend at 120. I would still prefer Access Bank for me because when I look at where Access Bank is trading, it's still trading far cheaper than most of these names. We are just waiting for the day that assets will come out and they will be able to pay dividend. And I'm telling you, the day assets comes out to pay dividend, the market will re-rate this instrument. And I'm telling you,
so is
you
it a case? Is it a case of the market overflogging the issue of assets not paying dividend?
You know, sometimes there's this edging effect in the market, and
Okay.
people actually selling down, and everybody's jumping to sell. People are buying, and everybody's jumping in to buy. Most people may not actually sit down to look at the fundamentals around these days. And I also think that the management of Access Bank, they have not done a very good job in that regard. I feel that there's a way you give forward guidance that could actually help market to actually trade appropriately
Yeah.
your instrument. And I think that's currently lacking in Access Bank as we speak currently. What the market would have loved is to actually see the assurance in terms of imagine the managing director of the bank to come out and say, oh, by full year, they are optimistic that they will be able to pay dividend, considering this and this and this and this are what they have already done concerning what the central bank, the reservation of central bank around their holding
Yeah,
as
the
an old co.
holding
And another
structure.
thing also now, the
Yeah.
holding structure now, considering the draft that actually closed by July 9,
Yeah.
and now we are expecting feedback from central bank on how to actually handle the old co structure. This could also be positive to Access Bank because they give them room for, because everybody will not be in the same bucket as we speak currently. So it's not only about Access Bank again. So this is affecting GTCO, it's affecting FirstHoldCo. It will also affect Zenith Bank in question. So it means that there's no more only Access Bank body. So it's now the old business structure that's actually
That
having
is
old co
being
structure.
affected.
And
Yeah.
I'm sure Stambik too will not be exempted. So everybody will now have to recalibrate their structure to actually suit the new regulation. And what market is just waiting is the final draft. What will be the conclusion of central bank in that regard? So for me, I still like Access Bank. I can take a bet on Access Bank at any particular point in time. I'm looking at it from this perspective that the performance, beyond the performance, I'm also looking at the fact of the valuation currently in relative to the performance. And it's pretty clear that the instrument is heavily underpriced.
Yeah, I agree with you. I think a lot has to do with that gap in communication. They've not done a good job, like kind of projecting or to the market or showing the market, what they intend to do, how they intend to achieve it, or even providing some form of timeline on how they intend to clear those bottleneck and then probably return back to dividend payment. But as you mentioned, I also agree with you. It appears the market is overemphasizing the impact, I mean, the part of the bank not paying dividends and overlooking the fact that it's probably one of the cheapest banking stocks now on the NGX. But people, let's talk about GTCO now. Um, we've seen it's been kind of having a steady movement. We've not seen that spike like we saw in the first half of the year. And I know you also talked about some of the banks listed, I mean, some of the banks that are now listed on the London Stock Exchange, probably foreign investors are now looking at acquiring those stocks from the London Stock Exchange as opposed to the NGX. Does this have anything to do with, the mild movement I was seeing in GTCO recently?
Well, the map movement that we saw was a bit of repricing, and don't forget that this instrument actually came close to trade around 100 naira.
Mm-hmm.
Zenith Bank came to about 102 naira,
Mm-hmm.
and as GT Bank also told the same line. But we saw a bit of repricing after the renewed interest actually came into the market. We mentioned that one of the catalysts that can actually drive markets will be the expectation around the Q1 results. And I think that's also one of the things that actually drove market that recently. We saw Zenith Bank move from that 102, 103 levels to about 120 naira. We saw GT move touch above 120 naira. And one of the reasons why we are not even seeing a lot of volumes, like I mentioned, in the market in that regard, was entirely what we actually highlighted earlier on, because he has dual listing. So it means that beyond the trading you are seeing in Nigeria, there's always another level of trading that is actually going on GTCO, on the London Stock Exchange. So it means that what we are currently seeing may actually be on the Nigerian market will actually be the local participation in that regard. And
Yeah.
the portfolio manager, the pension guys, the insurance guys, and a couple of the deep pocket guys actually playing in that regard. So what we have seen is basically the repricing of the stock. A lot of people actually took profit at the point in time they sold the market down, and but that gave room for fresh investor or people that are trying to actually go back into the name, and they were able to actually lock in quickly and take advantage of that low level the market. And I feel that even when market was dropping, I knew very well that 100 is more like a psychological level that it will be
Level
very
that,
difficult
yeah,
to
it's
actually
not
break.
good. Yeah.
Very difficult to break. So I feel that that now turned to more like a support for these names. And don't forget, at the point in time, that was their resistance level, but they broke it aggressively now. But that has now become more like a support level to
Level point.
some of these names. You see currently Zenith Bank to trading north of 120 naira. So
Yeah.
it gives you an idea of the fact that markets now has actually transformed beyond what it used to be. And like we highlighted, we mentioned that local investors are now about 85% of the market. So it means that the then panic that we used to see in the market where, foreign investors are selling, foreign are leaving our market, they are not things that could actually jitter anybody currently now. Because you mean that look at the current asset size of pension guys now.
Uh-huh.
They've more than grown about over 50% only this year alone, and it tells you and it gives you an idea of what could actually further happen by the end of the year on the part of these pension guys. So it means that they have funds to actually play with, and beyond that also, I was seeing a lot of a policy that's also market friendly. At the beginning of the year, Pencom came out and readjust rates of investment in equity market. So what they are trying to say is that you can actually put more funds in your equity market. Of course, as much as we want you to be conservative, but don't also deprive pension holder or don't deprive and contributors the opportunity to also take advantage of the current gain
Yeah.
we are actually seeing in the market. And as a result, they actually increase the level of percentage of each of the bucket that can actually play in the equity market. And we've seen more funds come into the market in that regard. We have seen market grow further in that regard. So I feel that it's fundamentally driven. It's not just premise on maybe just a rumor or something. It has fundamental. Sure, by the time GTCO release their their half-year result. Of course, it may be a bit delay because GTCO, Zenith, Access Bank, and UBA, and I think UBA, they ensure that their H1 result, they are actually audited result. So it simply means that they may not likely release that as at the end of 30th of July, 31st of July. It means that they could actually get a bit of reprieve from the NGX to actually extend beyond this month. But one thing about it, you know that when they release the results, it's already audited. So it means that you can actually fly on the back of that. So, and I'm sure by GT, time GT release their results, it's going to be another wonderful performance from GT. GT is very good in terms of or sweating their capital. One of the reasons why you see foreign investors like GT Bank, they have capacity to actually sweat their capital. They may not have as much asset size as other ones, but they are able to actually maximize their current they're currently sitting on and also use that to actually post great results. And when you look at all the banks that in Nigeria, the GT Bank still rated one when it comes to corporate governance, and
Okay,
that's
yeah, I
another
think
reason.
that
Another reason why foreign investors actually love GTCO.
okay. Let's talk about the NGX and the FTSE discussion. Is there any updates on that side? Because I know that there's this large NGS delegation that met with FTSE over the suspension, or they say they were going to get back to the market on whether they would proceed with the reclassification of the NGX to the frontier status by September. They were going to get back in August. Briefly, do you have any updates as to the outcome of that meeting, or we are still waiting?
Well, currently there's no update to the outcome of the meeting, but one thing is so sure for me. I think I would be surprised if by August, FTSE actually stood their ground that Nigeria will still remain on standalone. Because I expect the VC to actually be one where both
They
parties
would
will
have
sit down
ironed
and
out.
actually iron out
Okay.
then all the angles where they feel that they have reservation. NGS delegation would have been able to actually explain better, and the parties involved would have been able to actually find a way to actually cross the T's and dot all I's in that regard. So for
Oh,
me, I think I will assume it as a done deal. But
yeah,
except
we can
if
assume we have to wait. We have to
that,
wait.
that's why I said for me, I will
Okay.
assume it as a done deal. And one of the reasons why I said that is that I imagine being on a delegation to FTSE that in this regard. I mean that what would have done is that we would have actually sat down to see also what is the problem. Where maybe it's the plumbing around funding and all those things. So what do we need to do? How can we work around it? What should we do? Other advanced economy where they are currently doing this, what are they doing that we need to actually inculcate into our market so that we'll be able to actually also be more effective in this regard? Is it about the administrative or is it about the operational aspect of it? So what are the things that we need to speed up so as to be in line with that? Do we need to reverse back to the T+2 so as to actually meet? So these are some of the things I feel that they would have sat down on the table to actually iron out. So I will be surprised if by August we're not hearing from FTSE that Nigeria will remain or standalone. If that is the case, then it means that the delegation has not done a very good job. Because for me, I expect the delegation, if they know that they've not been able to achieve any great feat, they should have been out there trying to actually sensitize the market ahead of time. Because you don't want to wait until when FTSE and now are actually the one that are coming out to actually tell the market that this and this will not be possible because of this and this happened during the meeting. So that's one of those why I feel that one way or the other,
Okay.
actually, I would assume it as a done deal.
Okay. People, let's switch gears a bit now and examine stocks that might still be presenting huge opportunities, especially some stocks that probably have not caught the fire yet. The stock that might be trading at discount. So everyone is currently focused on banks that have already run. looking across the rest of the market, we have consumer goods, oil and gas, industrials, power, telecoms, which stocks still look undervalued or basis of fundamentals, and they have clear catalysts that you think would really move them. I'm looking at all sectors, including banking stocks, consumer goods, oil and gas, industrials that you think are still trading at a discount that investors should keep a tab on.
The first name that comes to mind for me is MTN. I feel currently MTN is trading at a huge discount, and I'm sure by the time MTN release their results the end of this month, and the result be likely fuel another level of rally on this particular name. This is a company that is printing cash. How many company has been able to actually come out of their negative shareholders fund since the crisis they had in 2024? MTM actually came out of this crisis within a year. And how? Because of the level of result that they actually posted. And we'll see what MTN did in Q1. And I expect MTN to actually replicate that in Q2. And so I will actually pick MTN, as number one in that regard. And beyond MTN also, another name that comes to my mind is Dangote Sugar. Dangote Sugar is a company that over time they've been suffering from financing costs because they have a lot of debts that they're actually servicing. And just about some months ago, that Sugar was in the market to actually issue a right issue to their shareholders. And the motive for the right issue is, one, to clear the debt, two, for further backward integration. And for me, when I look at it, so it simply means that if that Sugar is able to actually clear their debt, we will likely see that level of aggressive move in this name. And at a point in time, that Sugar was trading at a premium over NASCON. But currently, NASCON is trading almost like 2 or 3 times of that Sugar. And that was on the back of the heavy burden of debt and financing costs that that Sugar was carrying. But now that Sugar has cleared some of these things, so it means that they have capacity to fly faster because they are now very lighter. So I will pick that Sugar. I will have my eyes on that Sugar. And another thing for that Sugar is that don't forget that Aliko tried to actually consolidate that Sugar, NASCON, and Dangote rights into Dangote Food. But Sector is out of window on the back of the Dangote right that's not fully started operations. So I feel that it's something that will still materialize in years to come. And so I see that because when you look at the overall goal of the company, they highlighted that they will have their business in 3 segments: the cement business, the petrochemical business, and the food business. So it means that in the long run, NASCON, Dan Sugar will still come under the same umbrella. And
the food business.
So it means that
food acquiring
or taking some of these things or putting them in your position would not be a bad idea to speak currently. In the banking sector, we have mentioned around Access Bank and how Access is extremely very cheap. And I said, why you need to have Access in your book. And also, there are other names in the market as well that you also need to. Arade is also there as well. Arade, we saw Arade retraced from close to about not of 2,000 to around 1,200, but it's back around 1,560 region now.
So is it still cheap? Is it still cheap at 1,500?
Yeah, I still feel Arade is still cheap at 1,500. Arade still have upside momentum in that regard. So I feel that Arade is also a very good name. And like I will always say, the cement guys are also they actually present a very good opportunity for investors. Dangote Cement, the HML also, which is more like Lafarge, also present a very good opportunity for investors. When you look at it, currently Nigeria is currently undergoing aggressive infrastructural reform. And most of the roads are more like concrete road, and so it means that the number one benefactor of these projects are producers of cement, and so it means that they can now maximize output and convert idle segment of their business into almost more like a cash flow in that regard. So I will pick a Dangote cement as well. Don't forget that Dangote cement has actually gotten approval from the board to also list on LSE. And what that would do is further open up the business into international or global market. And so I feel that no time that would likely be the real name in that sector. And also these Chinese guys, I'm not sure they are in the market to play. They are here to actually transform, change things, and also make quite a number of money. So you see a lot of opportunity in that regard as well. Nigerian breweries at 76, not a bad deal for anyone looking to actually hold instrument for a 1 year horizon. Nigerian brewery, when you look at the 52 years, 50 to 52 months high, it has traded close to 100 naira. So trading at about 76 means that even when you look at 52 weeks high, you see a momentum to actually do another close to about 30-40% upside. So having Nigerian brewery in your portfolio will also not be a bad idea. And also you still have names like Zenith that are not bad for you to still have your portfolio. GTCO on the back of what we have mentioned. The foreign guys love GTCO. Most people like them on the back of their sound corporate governance, and which is more like what actually endear them to most investors. So when you look at some of the, also when you look at other sector like the consumer names as well. There are a couple of names in the consumer names as well. You see name like Nestle for someone looking to actually hold for a long time. Nestle, we expect by the end of this year to actually clear their negative shareholders fund crisis. So we simply mean that they should return back to positive shareholders fund, and that one way or the other will actually present the opportunity for them to actually go back to dividend payment. And what that will mean to markets is that we'll see markets re-rate some of these names in the market. So I feel that there are numbers of stocks are still in the market that has the opportunity to actually grow and move beyond where they are currently trading.
Okay, what do you make of the likes of Boa Foods, Unilever, and even names like Transcorp? What do you make about them? Are they genuinely cheap, or are they worth watching right now?
Unilever, for me, I think you need to pull all your eyes on Unilever. Unilever is a very good stock that you need to have. Very good stock. Unilever, they actually sit on a lot of cash. They have capacity to actually, when you look at their financial, they're currently sitting on heavy cash, which actually give them opportunity. Unilever can try to actually do share buyback, considering the level of cash they are currently sitting on in their books. And when you look at Boa Food, for me, Boa Food, because of the peculiarity of that name, I would likely see a repricing downward of that name before we'll actually see a bit of interest back into the name. Don't forget that there's been a lot of policy change on the back of NGX in terms of the number of stocks that you can trade for you to actually change the price of an instrument. At the point in time, it was 100,000 units, but now by the time they fully effect this, it will be 10,000 units who actually change the price of instrument like Boa Food. And what that would mean is that, because of the fact that the instrument lack liquidity in the market. So that one we know that fuel at the level of price adjustment that we have been seeing. So it means that by the time you can actually change price of this instrument with just sale of 10,000 units, it means that market will actually reprice this name downward aggressively. And that will change the price of bar food, and one way or the other, will bring us back to where the instrument should trade. And for me, I think Transcorp power, so to speak, currently still have opportunity as to actually grow. But currently, where it's currently trading now, I will be seeing a bit of stability around that. And I think that will be on the back of the reform that's currently ongoing in that sector. The government is aggressively trying to actually clear their standing fund that they're actually holding, that they currently owe the Gencos. And I'm sure you saw the Minister of Finance on Monday actually having a meeting around coming back with another round of MBET so that they can actually clear some of these things. So I think what is actually affecting that sector is because of funding. And one way or the other, that also has been impacting on Transcorp Power. For me, for Transcorp Power, I'll wait until when I see the sign that that sector is actually getting traction, that sector is getting new inflow of fund into it, and before I actually move to actually take decision around Transcorp Power.
All right. Thank you, Dipo, for the analysis. Let's begin to question now, but we also need to explore potential risk and, have an expectation for what the outlook is going to be for the rest of the year. So rates are currently about 26.5. That's the latest decision by the MPC. So it means your borrowing rate, if you're a business, is still going to be around 26.5% plus a premium that the bank would have to charge you. And so rates are at this level. If rates had come down, probably borrowing costs would have reduced. So rates are still around 26.5, the anchor rate. Domestic investors are dominating investments in the NGX, and we already discussed about the heavyweights and some of the banks or non-bank names that are still cheap that investors might want to keep an eye on. So what are the biggest near-term risks that could hit both the recent winners and the cheap names altogether? Are there risks that you are thinking about?
I think that the only risk I can see from where I'm seated is if the crisis in the Middle East actually go beyond the current levels and aggravated beyond where it's currently, and that actually fuel global unrest and maybe lead to aggressive inflationary pressure. And that actually led to the monetary policy guys changing their stance. What that could mean is that it could actually affect some of the businesses listed on the NGX. Like you have actually highlighted that currently the cost of finance to most of these businesses is around 30%. So it means that if the policy guys now start raising rates again, it means that that will further actually worsen the situation. Inflation will actually reduce the purchasing power of every Nigerian. And what it means that the capacity to consume more will not be there.
Yeah.
So when we are doing that, that will actually reduce productivity, reduce top line, finance cost will further impact on the bottom line. And at the end of the day, most of these companies will be likely be posting lower than what they are currently doing. That will also put a pressure on the currency. And because I would likely see aggressive pressure on Naira. And if that actually happens, what it will mean is that the pass-through effect of that also into inflation will also be there. And that will not be so much good for business holding. Majorly, people in the manufacturing sector means that the translation cost of actually converting raw material purchase or imported from abroad will actually go up, and that will actually increase your cost of sale, which one way or the other will reduce your bottom line as well, except you are able to actually pass that inflation to your consumer. And it's not all the names that are actually necessity in the market. Because of course, the product has to be necessity for you to be able to actually pass it to final consumer. And so I think that is one of the risks I can see from where I'm seated. Any other thing that, foreign investor leaving Nigeria market, I don't think is so much a risk, because we have actually highlighted that currently, as we speak, about over 85% of market share is currently being held by local investors. So that's not enough to actually fuel any risk. And I think the only risk I can see is inflationary pressure coupled with exchange rate volatility.
All right. Thank you so much for your brilliant analysis, as always, Tipo. Always a pleasure listening to you dissect the markets from one end to the other. Brilliant. Thank you so much, Deepo.
Thank you very much, Dr. Carver. It's always a pleasure being on your program.
All right, thank you, and we're glad to have you again, Deepo. And for everyone that has joined us today, thank you for watching. If you have any questions for me or for Oladipo Ajay, please let's have them on the comment section, and let us know which stocks are you looking at that you still consider that are cheap on the NGX that other investors should be watching? Please put them in the comment section. Again, like this video on your way out. And if you are new to the channel, please subscribe to the channel and share this video with your communities. I'll be back again next week. Thank you, everyone, and stay safe. We are out. Bye.